What an amazing bull market. How do you advise people to have courage to be here?
You know, courage is a very key word because as we talk to clients, we find that most of them still don't have courage. I think back to the first quarter of 2014, and I was speaking to clients and I would ask them, you know, do you think the markets can advance 0 to 10% this year? And most of them would say yes. No one thought the markets could advance more than 10%. So if we were dealing with a fairly skeptical investor base at the start of last year, we're dealing with an even more skeptical investor base at the start of 2015.
And that defines a bull market.
Right. We're not seeing people throw cash. Yes, you were citing some of those inflows into passive equity funds, into mutual, not to mutual funds. But we haven't seen a huge amount of participation or a huge amount of enthusiasm, I think, for equities yet. People believe there aren't a lot of alternatives, but they're not going heavily into single stocks.
But so much of it will depend on what the Fed does and how the Fed communicates its intentions. A lot of people say that will determine the market activity. And actually, Jeremy Stein, a former Fed governor, saying that the communication, the lead up to that causes more market volatility than the actual change itself.
Yeah, I'm not so worried about normalizing policy in 2015. I think the Fed and Yellen have done an excellent job of communicating what they're looking at, how they're thinking about the timeline of normalizing policy, and what we can expect in terms of rates. I'll tell you what I am worried about creating more volatility is growth and disruptions in growth outside of the U.S., particularly the Eurozone, whether or not Abenomics ends up being successful, and whether or not we see a meaningful slowdown, not less worried about China, but in other parts of the emerging world as a result
of
slower
what about rates? I mean,
prices.
over the weekend, Jeff Gundlach, rather.
Double line.
Double line saying 1.38%, yields crunching lower. What if we get a Gundlach market?
It would be, I think, surprising, but perhaps less surprising than this time last year. I mean, the consensus was squarely in the rates will rise throughout the year. I was absolutely in that camp as well. I thought the strong economic growth we were seeing in the U.S. would lead to higher rates. Didn't actually show up. Right. But now everyone's adjusted down their expectations. There are not a lot of people who are making a big short duration call anymore.
Senator Gregg, quickly, what is your Dow target for this year?
200,000.
Okay, 20,000.
Who's your leading GOP candidate for 2016? How about that one?
I think the economy is going to be very strong. I think the United States is in a unique position because of the energy issue and because we're still the entrepreneurial place.
We still clear markets like nobody. That's the heart of the matter.
And we have people who are willing to go out and take risks, and we have capital to give them to support them.
Judd,
like
thank you so much for helping us get the year started. Kate Moore, as always, thank you at JP Morgan Private Bank.